Good afternoon and welcome to today's panel on Australian exploration. My name is Sophie Spartalis and I'm a research equity analyst at Bank of America. I've been doing this role for nearly 20 years and we've seen some great exploration results in Australia over the years, which has been at the core a driving force behind Australia's success on the global stage. Here to talk more is Hedley Widdup, Executive Director of Line Selection Group, Barry Dawes, Executive Chairman of Martin Place Securities, Mark Bennett, Managing Director and Chief Executive Officer of S2 Resources, and Jim McKinnon-Matthews, Principal Exploration Geologist at Oz Minerals. So with no further ado, let's hop into these questions because I'm quite excited to hear from our panellists today. Firstly, maybe Barry, if we start with you. Australia is a big country. Where do you see the most exciting exploration corridor at the moment?
Well, it certainly is a big country and there's a lot of exploration going on right across the country. WA is absolutely the star. But I think we've probably got to say that the Patterson Ranges are the most interesting because we've got some small companies there, we've got big companies, we've got Rio, we've got Newcrest, that Havieron deposit is very, very exciting. And we've got Winu for Rio. So that to me is probably the most exciting thing. But Hemi for De Grey in the Pilbara is pretty exciting. And but we can just go on and on and on. The number of discoveries that's coming right across the country is very, very exciting.
And Jim, what about yourself? Where do you see the most exciting exploration corridor at the moment in Australia?
Yeah, I certainly agree with Barry that that the Patterson is certainly attracting a lot of attention at the moment. De Grey's discovery of Hemi has certainly put that firmly on the watch list as well. But I think something that's sort of creeped up and had been known about for a little while from a nickel and nickel copper PGE perspective is the West Yilgarn with Chalice's discovery of Yulimar. So that's potentially opened up a 1,200 kilometre long strike length on the western edge of the Yilgarn Craton there for nickel, copper, and PGEs. The other area that has actually attracted a bit more attention more recently is around the Gawler and the IOCGs in South Australia. So that's around recently with I guess Oak Dam discovery by BHP. And there's been a bit of news from juniors sort of showing that there's still some significant potential within this area. And it's certainly initiated a closer look from a number of players.
Hedley, I want to switch to you now if I can. Just as an investor, we all know that exploration is a long game. Can you talk to the importance of remaining patient as you see millions of dollars in some cases being spent on exploration every year, with limited success sometimes?
Yeah, I think this is a real big disconnect that the investment market makes when it thinks about backing exploration juniors. And probably one of the biggest misunderstandings that you can have as an investor looking at companies is to think that the first hole is going to find something. Exploration is a scientific and iterative process. So each time you collect some information, it tells you a little bit more about what it is you're trying to find. And I can't think of any deposit, maybe Mark or Jim have found something with their first hole, but I can't think of any where the discovery hole was the first hole. I mean, even things like, the enormous deposits that you would think you could spear it, right down the middle. Olympic Dam in South Australia, an IOCG like where Jim's talking about. I think it was OD10 was the discovery hole, and that was only really with the perspective of several of the holes that were drilled after it to say, yes, this really is a discovery rather than just a single narrow occurrence within something. So patience is tremendously important, but that's where it gets really difficult because, you spend $1 million on something and don't have a discovery, it's really hard to raise the next $1 million. And I think that's something which people who've been in the game a while understand, but a lot of investors miss that point completely.
And Barry, as a analyst or from Martin Place Securities, your views on this?
Oh, look, I like to put in a bigger picture perspective. what we've found is the geological experience of our geologists in Australia over the last decade is far superior to what it's been in prior decades. And we've seen the technology has improved enormously, particularly our remote sensing, whatever geophysical tools we're using, whatever exploration drilling we're doing. So we're getting better at targeting projects, and consequently, we're getting better value for our dollar spent, and we're reducing the risk. So there's some things that have taken a while, but by the same time, there are some things that have been done very, very quickly. The Chalice Julimar discovery, was one that they discovered that with the first hole. A bit unusual, and they're going to have a resource by the end of this quarter. And also, when we look at Hemi, we went from essentially nothing at Hemi to 6.8 million ounces in just 15 months. So that's a bit of a different approach with exploration. It was spending a lot of dollars, drilling a lot of holes and building up the resource very, very quickly. So I see a lot of companies now that are very well funded, that can go and spend the funds, have a lot of technology to assist them. We've got artificial intelligence reviewing models, people like Sensor that are working with DGO and so on. So the risk is going down. And so I think people don't need to have perhaps the patience for many other projects that we've seen in the past. So for investors coming in today, providing a reasonable management and well-funded company, I think that the whole game has changed, and I think we can deliver good results reasonably quickly.
Yeah, Mark, let's hop over to you. Both Jim and Barry have mentioned Chalice, polymetallic deposit, and it seems as though if we just look at polymetallic deposits more broadly, they seem to be re-emerging. They're of size, but how do you see the metallurgical processing risk going forward? And I guess how economic can they be given that risk?
Who would you like to go first?
Mark, go for it.
Okay. Look, I guess if they're styles of deposits that are well known, the processing routes are pretty well known as well. When things get complex, for example, with a straightforward nickel mine, it's a pretty straightforward flow sheet. With a nickel copper mine, it's slightly different. Now, with something with lots of PGEs, it gets more complex because the devil is very much in the detail. When you produce a concentrate, you can choose to produce a nickel or copper con with PGEs, or a PGE con with nickel and copper, and depending which way you slice and dice it, those other elements aren't actually advantages. They can be considered penalties, and at best you won't get paid very much for them. Sometimes you'll actually get charged for having them in there. So the way the sort of relative abundances of those different metals plays out really determine the ultimate financial value of the product. So it does get more complex, but I think, as with Hemi as well, being factory, it's got scale to sort of cover that disadvantage. So as long as the deposit is big enough, then the extra capex required to process those things with more complex plants, it can be borne by the overall project. But it does put, I think, a lower limit on the size of deposit you can sensibly think about developing.
And Barry, your views on these polymetallic deposits?
Well, I'm really surprised at the number that we're seeing, particularly the VMS type deposits. We're seeing them in Queensland, we're seeing them in WA, and being polymetallic, we end up with a number of different concentrates, as Mark was suggesting. But the technology there is pretty standard. And the other thing is, and Mark, you can correct me if I'm not right here, but most of our mineral deposits don't have too many nasty components to them that makes the the separation of the individual concentrates difficult. So we've been quite lucky about all that. The other thing is that I think Julimar and Gonaville, whatever you want to call it, is such a game changer in Australia, because it's going to lead to a lot of hydrometallurgical processing. Now, we're already seeing that sophistication in the lithium. We're seeing it in the nickel sulfates, cobalt sulfates that Nickel West is developing. And so I see that a group like Chalice is not going to sit around and say, we're going to send off our concentrates offshore. I think they're going to be doing a lot of really hard work here, and that will bring this new hydrometallurgical industry, I think, to WA, and I think they'll do it brilliantly. Also, when we think of some of the nickel scandium type projects in New South Wales, these are they're chemical plants now. They're very, very sophisticated chemical plants. So I see that as a step up from what we're normally looking at. So when we start talking about polymetallics, it's a wide range of products and mineral assemblages. So it's just going to make it the metallurgy so much more interesting and sophisticated.
No, absolutely. Now, Jim, let's pop across to you. Major mining companies look at exploration very differently to juniors. They have much bigger pockets and generally have the first mover advantage in new basins. And we've talked around the Patterson range today. We've seen, as we said earlier, you know, Havieron and Winu being found by the majors. Can you talk to some of these differences that you observe, being, I guess, a mid-cap miner?
Yeah, sure. I guess as a general comment, larger companies, they don't have the time pressures to get early results that the junior sector does. So they can actually peg ground at a very, very early stage, and they can effectively work the ground up from a conceptual viewpoint without those pressures. And it can lead to systematic follow-up later on. However, it can also lead to larger companies just sitting on the ground and actually not exploring very well as well. So it is a bit of a trade-off. Having said that, you know, you've got to bear in mind that 3 of the last 5 major discoveries in Australia have been with juniors in new terrains. Of course, you know, there's Nova with Sirius that Mark would know very, very well. There's De Grey with Hemi and Chalice with Julimar. So, you know, often it's not the bigger companies are not the first movers or the discoveries in these new terrains. So I think the it's not a given that the bigger companies in new terrains are going to be the first discoverers either.
And Mark, your observations there, big versus small?
Yeah, look, I agree with what I think Jim is saying. Is I find generally it's the juniors that are the first movers. They're quick, flexible, and more risk tolerant, and get into places first. And then it's often the majors who come in and mop up through corporate deals or farm-ins or whatever. And I think actually the Patterson is a good example of that, with Antipa, SEPA, Encounter, Greatland Gold sort of being in first, and then Rio and Newcrest coming along afterwards. And somewhere I'm working at the moment, it's not Australia, it's Finland, but there's a bunch of Canadian juniors in there first, sort of being mopped up by the likes of B2, Kinross and Newmont. And even I think what we've seen with the Chalice discovery is, you know, there was Chalice, Caspin and a few other small companies. And then I think it's Anglo came along and pegged pretty well the rest of southwestern Australia around them. So I think that the juniors get in there first, but the problem with being a first mover sometimes is you may have the best real estate, but it's pretty well a blank canvas, and you end up doing the job of a geological survey. And sometimes you end up doing the legwork as a first mover for somebody else who's going to take advantage of that as a second or third mover, standing on your shoulders down the track. And that's where I think the majors operate well. They can sense those opportunities as a way in. I guess that's my perspective on it.
And Mark, you talked around where partnerships do work well. How can the junior, I guess, further protect itself as much as possible?
With very long and very stringent agreements, I think. It's, there've been a number of instances of sort of mismatches and Mexican standoffs with a small company and a big company, where a small company that needs to work quickly and produce news flow and has a much lower materiality threshold, it can create all sorts of problems between the partners. So if you find a partner that's somewhat aligned in the first place, and you have an agreement that tries to anticipate all of those things that might otherwise become a bone of contention, that's really key, I think. And it's ensuring that the bigger guy has regular expenditure obligations, so they're constantly spending every year rather than back-ending, starving you of news flow. It's little things like, in an agreement, having freedom of access to the information of the big guy and the sort of unilateral ability to determine its materiality, so you can keep your market informed, and some sort of arrangement so that if the big guy is either moving too slowly or trying to spend you out of existence, there's a way of getting the asset back. So it can work if it's well thought through up front, but it can take a long time to agree those terms, I think.
Yeah, that's a good point that you make in regards to, spending the CapEx too quickly and the junior not being able to keep up. Hedley, as an investor, big players with small players, where do you see that work well? Where have you seen it come undone? And again, how can the junior protect itself?
Well, from the point of view of the person who might hold the shares in one or both of those companies, where a big company coming along working with a small company can be a saviour is where the small company can't raise money under any terms anywhere else. So by forming a joint venture, they manage to take their idea forward and their idea lives, and they might have the opportunity then for some of the reward to come into their capitalisation at a position down the track. The issue with that is that if you're dealing from a position of desperation, then all those things that Mark just warned us about don't find their way into agreements, and you stand to be quite vulnerable. It's not to say that large companies will go out to screw small companies, but because there will be an inevitable difference of opinion about how work should be done, or even what work should be done and how much should be spent, it leads to an inevitable disagreement that elevates from a difference of opinion. But where it has worked, I mean, if you can protect yourself, etc., there's some pretty good examples through history. The Argyle diamond mine is quite topical because it closed last year. That was found in joint venture. In fact, it was started as a joint venture. It evolved as a joint venture, eventually brought in Rio Tinto. And the discovery was made between Rio Tinto and a consortium, if you like, of juniors, which, whether they were one or several, turned into Ashton. And that was a company which, couldn't fund its whole way either. And there was a book that's just been released actually, which documents the history of that deposit, and the discovery is quite interesting. But it points out Ashton could not have funded that entire development itself, but it turned into a very rich and profitable mine because it had the partner that came along. And it wasn't just the funding that unlocked, I would add, it unlocked the ability to market the product as well, which in diamonds is no mean feat. So I think they can work, and these partnerships generally evolve best through positions where one or both are stressed. The junior might be stressed for lack of money. The major might be stressed through lack of ideas. Sometimes the best ground is held by small companies and they have to deal as well. So, that can cut both ways. But can I ask a question back to Jim and Mark from before? You were just talking about the difference between how juniors and majors explore, and they tend to come together in these joint ventures, and we're talking about the risks. But I just wonder, from those gents' point of view, do you have an opinion, or have you ever seen a trend as to where perhaps the best idea development might take place? I mean, exploration starts off as a blend of science and creativity. Some people, organisations, are extremely mechanical. juniors can be far more creative, but that doesn't necessarily mean that that's where the magic will happen, so to speak. But over 50 years, we've seen, discoveries by majors go from about 20% of discoveries to almost 50%. So they must be doing something right to be able to capture that much of the market. I don't know what you guys think about that.
I think, sorry, Mark, I'll go. I think from a, I think it's certainly a combination. It's always going to be a combination, because the majors, I think the way it works is the juniors generally got the ground. They've got some ideas. If they're thinking along the same lines, then the combination works much better than the sum of the parts. The sum of the parts works better than the individuals.
Yep. So it's certainly not clear cut. One does it better than the other.
I don't think so.
No, it is a combination of science and art, and I think the big companies have the luxury of departments that can just do nothing but map prospectivity, if you like, to define target regions, whereas the small companies tend to have a lot of creative people who have often come from the bigger companies because they're a bit too creative for the big companies. So the combination of the two, I think it can be quite potent.
Yeah,
sound like you were padding out your CV there, Mark. But thanks. Sorry for the interruption there, Sophie.
No, I think
no problem at all.
It
no,
works,
it's fantastic.
It works both ways. It does work both ways, because the junior depends on their state of desperation as well, because the junior will always revert back to empirical anomalies, whereas the large organisations, because they do have the time and the funds behind them, will actually go out and have a crack at the conceptual targets of the size that they're looking for. So their net or their screen is a lot broader than your junior is, but it does come down to how desperate the junior is to get their share price up to raise money.
Yep.
So we've spent a lot of time talking around big and small. Let's maybe focus on small versus small. Obviously, a lot's going on in Australia and also overseas. But do you think that there is a need for consolidation among this junior exploration space? And maybe, Hedley, if we start with you.
It's a really good question. And, you could come at this at the point of view of there's only so much money to go around, and a number of those companies are just going to miss the bus because they either try to fund themselves at a point where the market goes weak, or they miss it altogether because the market turns on them. And I suppose you could also say, well, that doesn't really matter too much, because the money will find in an efficient market the best situations and fund those preferentially. Will consolidation help either of those? Look, I don't think so, because if you put two juniors together, what you do is you take budget 1 and budget 2, and then you put them together and they still both need funding. It might be that you can save something on overheads. So if a company is spending, I don't know, $1 million a year on keeping its lights on, you can take $2 million and mix them together, and you might spend 1.5. So, there is a theoretical, I suppose, synergy to be captured there. But I don't think that that's going to be as easy, because you probably lose that much in lawyers' fees that, that's probably 2 years of that synergy busted anyway. But where it would work is where you get two companies which are right next to each other. There's parts of Australia at the moment. Leonora is one which has featured a lot of juniors which had struggled to fund over the years. Possibly 1+1 would make something big enough to either appeal to one of the bigger players in the area, or to put something together that's of scale of themselves. And I'm sure there's been discussion around those topics. But the issue, of course, which blocks that is that in two companies, you tend to have, one bull each, and you can't have two bulls in a paddock. So who ends up running MergeCo, and that's often what brings those junior plus junior discussions undone, I reckon.
No, absolutely. Barry, comment from yourself?
Oh, look, I think Hedley's hit it the nail right on the head there about personalities. And I think I much prefer to have a dozen Mark Bennett's in a dozen companies with his support team, rather than a dozen Mark Bennett's working for BigCo. I think that they would be far more successful in individual companies. I think that what we've really seen over the past couple of decades is the focus on single project companies. And you really do need market focus, project focus, and you need a champion to develop that project. It's pretty hard to have more than one of those in a small company. So I'm very much in favour of small companies going out and doing this thing. Now, what we've seen over the last 12 months has been something quite extraordinary, in the sense that the amount of capital that's been raised in the resource sector it's just been extraordinary. It's many times what we would have seen for the previous 10 years, any one year in the previous 10 years. So we've now got we've got a junior sector which is very, very different. Finally, we've got young people who've come up to take managerial positions, and they've got experience, where we really didn't see that for quite a few decades. I find this is quite a very, very positive thing. And a lot of these young people have had strong technical training with modern techniques and technologies. So I think all these companies really should basically run their own races. The opportunity for consolidation, I think, again, as Hedley said, if you're close together, it makes a lot of sense to come together and reduce your costs. But usually there's not much of another reason to do it. The other thing that I've seen in the last 12 months, which I really haven't seen for quite a long time, is companies like Rumble Resources and Red Metals and ZNC, where these people have got a number of projects which have got real world's or tier one potential. And I just haven't seen much of this before, but those sorts of companies have got big picture concepts, and they're able to come to ways of monetizing them or doing joint ventures, and allowing the company to go as almost a conglomerate, with the management of the company there being more important maybe than the geological prowess. So those companies look pretty interesting to me, and quite a contrast to the single project companies that we've seen over the last couple of decades.
No, absolutely. Mark, you mentioned earlier that you're doing some work in Finland. If we can just look at Australia versus the rest of the world, how do you think that our Australia potential stacks up to what you can see at in the rest of the world, and do we still remain attractive?
Look, I think Australia wins hands down. I've got personal experience of Northern Europe, West Africa, North America, amongst other places, and on two fronts. First of all, it's prospectivity. You know, there was a view prevalent 5 to 10 years ago that Australia was a mature place for exploration, but what's happened in the last couple of years has blown that out of the water. You know, there are entirely new provinces that we didn't even know existed, yet they were right under our noses. And there are gems to be found in well-known districts as well. I mean, you know, Fosterville is a good example of that in Victoria. That was viewed as a tight old refractory deposit, and now it's one of the best gold mines in the world. So prospectivity-wise, Australia has got everything you can dream of, I think. But importantly, doability as well. You know, in terms of established rule of law, mineral title, low population density, and competition for land use. Non-seasonality of the field season in most places anyway, health, safety, you name it, and the speed of getting approvals and permits, and the sort of government apparatus to efficiently deal with all that. I've not seen anything that comes close to it, and I don't actually believe the annual Fraser Institute survey of mining jurisdictions. To me, the ranking you see in that doesn't resemble reality in any way at all, and Australia is far and away above the rest. Obviously, it varies from state to state, with I think WA being the easiest because there's no one there. but in general, heads and tail above the rest.
I'm sure Mark McGowan would disagree with that WA comment. Jim, let's go to yourself. Osmond was obviously very active in Brazil, where COVID is running rife at the moment. Has that inhibited your ability to do what you need to do over there? And I guess you've got other deposits, across the globe that you're still exploring on. Can you just talk around, the challenges of exploring in those offshore markets versus here in Australia?
Yeah, well, firstly, I probably agree with Mark in his summation there around Australia being a great jurisdiction to work in. Coming back to Brazil, we've still been able to operate. It's people are living with COVID over there. It hasn't made things easier. There's been quite high rates of people getting the virus, obviously due to the cultural aspects of the country. Certainly doesn't make anything easier. But what we have found is that the staff and the people who work for us over there are a lot safer when they're actually on site than when they are actually on break. And there's nothing you can do about that to control it. But as long as you've got the procedures in place to make it as safe as working environment as you can. I guess back to the Australia versus the rest of the world. Again, like Mark, I've worked in many places around the world. And while Australia still has some regulatory tape, that it's not decreasing, it's getting more complex in Australia. It is still a safe and stable jurisdiction to work in. You know the rules. You're a first world country. You've got the rule of law, and you just need to look at some places in South America, what's happening over there that have really stirred the pot, and it gets people very nervous, particularly around in areas around Peru and Mexico.
Jim, let's stay with you because we talked about COVID, and I guess just in a COVID world going forward, exploration teams need to take a much more cautious approach, particularly when we're talking around rural communities, and we've especially seen that here in Australia with our Indigenous population, and no doubt you'll also see that in Brazil. How do you see that going forward in gaining access to the land and being able to push forward with your exploration programs?
Yeah, and answer to that very cautiously. I think it's going to be around for a while. It's going to be part of the business as usual, and we're just going to have to deal with it. It comes down to communication and engagement with the communities where you're working. That's obviously very important at the moment, but it's becoming more and more important because particularly in communities where exploration and mining is not the norm, because if you go in there and there by chance happens to be a case of COVID pop up around the same time as you're there, it doesn't matter whether you brought it in or not, you know where the blame's going to lie. So the reputational damage could be enormous. So very, very cautiously is the way forward there, and communicating to the community what the mitigation procedures you've got in place is very important. And this is just going to be the norm for the foreseeable future, in my mind.
I agree. Mark, we mentioned obviously a lot of exploration activities and sort of what were the hot deposits and what were not. If we just look at the commodities, what would you say would be the hot commodity at the moment for exploration?
Well, I think in the markets perception, lithium's hot again. At the conference I was at last week, there was a very clear message that everybody was moving towards the clean and green theme. So anything to do with electrification, batteries, alternative power, nickel, copper, cobalt, lithium, PGEs, rare earths for wind turbines and so on. And as we saw, I think yesterday with BHP's move, is food security. So fertilizers and things like that are going to become more to the forefront, I think. I think gold will always be there because that's a risk hedge, but that seems to be the main thrust at the moment.
I tend to agree with you there. And Barry, who do you think? Well, what commodity do you think is hot for exploration at the moment?
Oh, look, I think what Mark says about lithium and then all the battery metals, that's pretty important. Gold is always our biggest exploration budget. We produce about 350 tons of gold. I can see that continuing to grow. So I think that is very much a hot and very steady. And I think copper, if we take copper outside of the electric vehicles, it's one thing which is very important. The other thing which I think is extremely important as we are developing technologies, and if we just take our smartphone or computers, the number of elements that we've got in these devices, there are dozens of them, and each one of them has got an individual physical performance characteristic, whether it's heat dissipation, whether it's conductivity, capacitance, or whatever. And it means that there are many of these raw materials. Some of them might be rare earths, but we can be talking about all sorts of other minor metals, something like tin, tungsten, and so on, antimony, where these become very, very sophisticated products, very, very high value products. And I think if we go back to the point I made about the hydrometallurgical industry, which is unfolding in Australia, I think people are going to appreciate a lot of those minor metals more. And so it could be quite a niche sector, niche project, niche companies. But they're the ones, if you do the work, I think you could come up with some pretty interesting opportunities. Because now we're talking about big markets. Computers and the internet basically means that anyone can buy anything anywhere. They can manufacture it anywhere, but you can really develop a niche product because you can get a global presence very, very quickly.
No, absolutely. Mark, I'm going to end with the final question with yourself. A lot has changed in how we explore for different minerals, but also the assay turnarounds that we achieve on site can also enable faster programs or faster turnarounds. Can you provide some examples of new exploration technology you are using today?
Yeah, sure. There's new techniques. For example, neutron activation for gold, commercialized by the Chrysos Corporation, where you can reliably get a number on nuggety gold that would otherwise be fairly dodgy. I think that's important where you're exploring in goldfields with coarse gold, like Victoria, for example. Portable XRFs are commonplace now, so you can get a pretty quick read on what's in your core or what's in the mine face. There's other, not new techniques, but they're being used more now, things like ionic leak geochemistry, where you can use sort of sensitive techniques to see through cover that you might not otherwise be able to. And I think one thing that I've noticed recently is data mining. There's fancy computer code now that enables you to go into the public record and search documents for keywords, but not just in a dumb way, in a way which, anything in a PDF, a Word document, a drawing, handwritten, or whatever can be recognized and read. And the way the words are used in the sentence can be linked together using artificial intelligence to actually find all the reports or the places with a geographic reference where you've got reference to a particular thing you were looking for that would otherwise take months and months of trawling through reports. So I think there's a whole array of things. No one is a game changer in itself, but incrementally, I think they do provide that extra edge. Yeah,
no, absolutely. The technology is certainly advancing at a very fast pace. Well, with that, we've run out of time. So I want to thank our panelists again. Hedley, Barry, Jim and Mark, thank you for your time. It's been really insightful, and I'm sure our viewers will also agree. But with that, I draw it to a close, and thank you and goodbye.
Thanks, Sophie.
Thanks very much,
Thanks,
Sophie.
guys. Good to see you. Thanks.